Liquidity will return to the market, and I'm optimistic on the macro side. The 4-year cycle run ahead will end as we get into 2026. I think we'll know if there are any more bodies to surface after the 10/10 liquidation event by the end of the year. And more broadly, I'm actually optimistic on the regulatory side. So I think as we get into 2026, you'll see these short-term negatives be removed, and you still have the long-term positives. But I do think around mid-December, Christmas time, I think the positive trend will be overwhelming and these negative concerns will start to vanish in people's minds. That I got the price target right, but the timeline wrong. I think that's going to push out into 2026. I do think we'll get to $200,000 Bitcoin in 2026. I think that's the direction we're going.
Matt Hougan begins by outlining 4 short-term forces weighing on crypto prices, forces he fully expects to fade as we enter 2026. The macro environment has shifted risk off. The fallout from the October 10th liquidation event, old-school crypto investors are selling in fear of stalled U.S. regulatory progress. These 4 headwinds are temporary and expiring soon. All 4 of these headwinds are short-term. They fade as we move into 2026, and when they do, the long-term forces take over.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think we're facing 4 major short-term headwinds. So one is from a macro perspective, the market has rotated risk off and liquidity has come out of the system. Crypto is a risk-on asset. We're in a risk-on market right now, so that's a headwind. 2, we're dealing with the after effects of the October 10th liquidation event. Specifically, people are wondering, are there still bodies that will come to the surface? Was a major market maker harmed? Was a major hedge fund harmed? We're sort of waiting that out. 3, I think a lot of old school crypto investors who are sitting on big gains have been selling because they're worried about the 4-year cycle repeating. They lived through 2018, they lived through 2022. They don't want to live through 2026 with a long crypto position intact. And 4, I think people are worried about regulatory progress stalling out in the US. They see Republicans sort of losing in elections. They're worried about things like market structure. The thing about those 4 things, from my perspective, is that they're all relatively short term. Liquidity will return to the market, and I'm optimistic on the macro side. The 4-year cycle run ahead will end as we get into 2026. I think we'll know if there are any more bodies to surface after the 10/10 liquidation event by the end of the year. And more broadly, I'm actually optimistic on the regulatory side. So I think as we get into 2026, you'll see these short-term negatives be removed, and you still have the long-term positives of massive institutional adoption. Harvard tripling exposure to Bitcoin ETFs, Abu Dhabi doubling exposure. You have the massive trends of regulatory progress. You have the massive growth on stablecoins and tokenization. And I think those slower moving big forces will overwhelm these sharp short-term forces sometime as we approach year end and get into Q1. And I'm really optimistic about where we go till in 2026. But we do have to get there first. And right now, the market's a little on edge. Who knows where it goes in the next few weeks, but I'm very optimistic about where it goes next year. I find this a very attractive area to start to move back into the market, to nibble at it, to time TWAP it or dollar cost average it, because it's entirely possible from my perspective that we could retrace all the way back to where we were before the Trump election, which is like in the 70s on Bitcoin. I don't think we will, but that seems possible. The fear and greed index is already at 12. That's like near historic lows. So how much worse can it get? But I wouldn't call the precise bottom. I think these negative forces will start to abate as we move through mid-December, and we'll start to feel the positive forces. Where we go between now and mid-December is hard for me to tell. Will we front run that change? Will we still dwell in these negative forces? I don't know. But I do think around mid-December, Christmas time, I think the positive trend will be overwhelming and these negative concerns will start to vanish in people's minds. the long-term trajectory is down. Rates are already down more than 100 basis points. We're going to need a new chair of the Fed in 2026. I think we'll see more rate cuts. It would be helpful for this bottoming process for the Fed to cut rates. Like when I think about what can shake us out of this and cause it to be a acute bottom, the Fed cutting rates would be positive. Liquidity returning would be positive. The Fusaka upgrade going on schedule in ETH would be positive. Regulatory progress would be positive. Each of those are good. To the extent that they don't happen, it's a negative. So it would be helpful if the Fed cuts rates. But if they delay another month, it's not going to break my thesis on Bitcoin. I think 2026 will be a positive year. Look, from my perspective, on a fundamental basis, the 4-year cycle is dead. And the reason I say that is the big drivers of the 4-year cycle historically was the halving and interest rate movements. The halving becomes half as important every 4 years. So definitionally, it's a weaker factor than it was in the last 4-year cycle and the one before that. It's 1/8 as big as the original, right? And then interest rates went up in 2018. They went up in 2022. And I think they're going down in 2026. And at the same time, as Arthur would say, you have this massive institutional adoption. I mean, I really want to emphasize Harvard tripling its exposure, Abu Dhabi doubling its exposure, Bitcoin getting approved at major wirehouses like Wells Fargo and Morgan Stanley and others. These are massive factors. So I think from a fundamental perspective, it's dead. It still has a psychological impact. That's why I think it's contributing to this pullback, people selling ahead of it. But do I think 2026 is going to be an up year? I do. I think it's actually going to be a very good year for Bitcoin. And I think we'll bury the 4-year cycle as an interesting historical anomaly from the early days of crypto. That I got the price target right, but the timeline wrong. I think that's going to push out into 2026. I do think we'll get to $200,000 Bitcoin in 2026. I think that's the direction we're going. I didn't anticipate the level of selling from traditional old school investors, both directly selling their Bitcoin and then doing covered call strategies against their Bitcoin. I didn't anticipate that. I also didn't quite anticipate how much the DAT trade would go up and then recess almost immediately. I thought that was a little bit of a longer term trend. So yeah, my price prediction that I made in December 2024, I said Bitcoin would trade to a new all-time high, which it did. But I also said it would get to $200,000. I think it's going to get to $200,000, but I think it's a 2026 story, not a 2025 story. Look, I think there's a good chance we rally from here, but it would take a lot to get to those price targets. You have to look at ETF flows, but then you also have to look a layer deeper at the 13F reports. The 13F reports are the reports that firms that manage more than $100 million have to file every quarter with the SEC. And you can use those to see what percentage of the ETF is held by institutions. And so an interesting thing we've seen since Bitcoin ETFs launched in January of 2024 is that the percentage held by institutions reporting on 13Fs has been going up and up and up, right? It was in, I think, the teens. Now it's in the 30s. I think it's going to 50 or 60. So even sometimes when you see outflows from Bitcoin ETFs, that can be retail investors exiting, but you have institutions buying. So that's one thing that we look at. The other thing we look at is, Bitwise is pretty unique. We have 20 plus salespeople. We do 15,000 meetings with institutions a year. I was just on a call with a major wirehouse, that manages trillions of dollars of assets. And we can see the progress of Bitcoin approvals and ETF approvals at these platforms. And we hear something about where they're going. And that gives me the other color. When you put those two things together, you do see this increased institutional adoption. I think in 2026, it's going to be fairly common for them to own 1% to 5% crypto. I think it's mostly going to be Bitcoin, but some may add ETH, Solana, or an index-based strategy. But generally speaking, I think it's strongly up and to the right. And that trend hasn't slowed down in the bull market. It's continued to move in that way.
Hougan fully stands by his $200,000 price target, but pushes the timeline to 2026. He underestimated how much old-school investors would sell, how much the DAT trade, dividend and yield chasing would spike, then fade, how much 2024-25 regulatory noise would suppress enthusiasm. But fundamentally, nothing has changed in his long-term model. He explains this using a simple framework. Bitcoin is a service, not a cash flow producing asset. Just like Riverside provides recording, AWS provides compute, Bitcoin provides digital apolitical wealth storage. The more people want the service, the higher the value. Harvard wants the service. Abu Dhabi wants the service. Morgan Stanley wants the service. Emerging markets want the service. And that demand keeps rising.
Digital assets that have ETFs have a unique advantage. So these institutions aren't going to allocate to an asset that doesn't have an ETF attached to it because it has a regulatory sort of question mark around it and because it's just difficult. They're going to do it through ETFs. So what does that mean right now? It means in the US, the eligible assets are Bitcoin, ETH, Solana, and XRP. That's all we have. That number will expand over time, but that's it. Within that space, we think they're going to allocate fairly broadly. I think Bitcoin is often the first port of call, but they will want exposure to the assets that underpin stablecoins and tokenization and DeFi. So we see significant interest in our Ethereum ETF, our Solana ETF, BSOL, launched in the heart of this bear market and has had like 20 days of straight inflows, which is incredible. We've seen $500 million flow into that. So look, I think there's demand beyond Bitcoin. Bitcoin is the most mature, will get most of the assets, but there's demand for ETH, there's demand for Solana. That's moving in a positive step. Yeah, the big challenge that I have when I speak with institutional investors is they're like, how is this object that you can't touch, that doesn't produce cash flow, how is it worth $2 trillion? It doesn't make sense to people who aren't crypto native. And the way I explain it to them is Bitcoin provides a service. The service is the ability to store wealth in a digital format without a government or a bank. Gold sort of provides this service in a physical format, right? It's the ability to store wealth in a physical format without a government or a bank. Bitcoin is the ability to store wealth in a digital format without a government or a bank. The reason I use this is because we're used to services having value, right? We're recording on Riverside, which is a service that lets you record video and data. The way Riverside as a company works is the more people who want its service, the more valuable it is. If fewer people wanted the service, it'd be less valuable. If no one wanted Riverside service, the value would be zero. The same thing is true of Bitcoin. The more people who want this service, storing wealth in a digital format without a government or bank, the value goes up. Fewer people want it, the value goes down. If no one wants it, the value is zero. The difference is Riverside is a company, so you can write it a check and it has an employee who deposits that check and creates earning. You can't write a check to Bitcoin. Subscribe to Bitcoin as a service. It's not a company. There's no one to cash the check. The way you get the service is you buy the asset. If you buy Bitcoin, you get the service, the ability to store wealth in a digital format without a government or a bank. And I think this resolves the big challenge that TradFi investors have with it, which is you have something you can't touch with no cash flow. Why is it worth anything? If you say it's actually a service, and the way you get your service is you buy the asset, then they're like, I get it. The reason it's up 1,000,000% is no one wanted the service. And today Harvard wants the service and Abu Dhabi wants the service and, Wells Fargo and Morgan Stanley want the service and I want the service. If more people want the service, the value is going to keep going up. So that's how I like to put it in context for people who aren't from the crypto native side where it's just obvious to them. I think Metcalfe's law is interesting. We have a price target here at Bitwise of 1.3 million by 2035. So that's where we think it's going over the next decade. The way we get to it is we take a total addressable market approach, by which I mean, we look at the size of the markets it's going after. So just to narrow down to one, it's not the only thing Bitcoin's doing, but one thing it's doing is it's offering an alternative to gold. Okay, let's think about that market. Today, gold's a $27 trillion market, Bitcoin's a $2 trillion market, so it has about 8% market share. The way you would value Bitcoin is you make two projections over the next 10 years. Over the next 10 years, how big will this store of value market be? And this is the mistake many investors make because the store of value market is getting bigger. Actually, believe it or not, gold was a $2 trillion asset 20 years ago. The gold market has next. So the store of value market is growing like 6 or 7% a year. So you take the existing market, you grow it another 6 or 7% a year for the next 10 years. Okay, now you have your total addressable market. And then you say, how much of that market will Bitcoin take? Right now it's 8%. In our projections, we think it'll get 25%. Now, I think that's pretty conservative. I actually think Bitcoin may be bigger than gold in 10 years, but let's just assume it's 1/4 the size of gold, 1/3. So gold is 75% of the market, Bitcoin is 25. If gold is 75 and Bitcoin is 25, and the market continues to grow the way it has for the last 20 years, Bitcoin mathematically is $1.3 million. And that's how we arrive at the future target. And then how do you get to the price target today? You do what you do in all finance, which is you discount that backwards. So what is the appropriate discount rate? Is it 5%? Is it 10%? Is it 20%? And then you work backwards to your price target. When we do that, we see Bitcoin as significantly undervalued today. And for a long-term buy and hold investor, I think 1.3 million in 2035 is pretty conservative. And that's like a fantastic return, right? That is, a 15x over the next 10 years. That's a life-changing return. And I think that's the kind of return that's possible using, again, very rational assumptions, just the same thing happening, which is the market growing and Bitcoin getting an increasing share. That happens for another 10 years, that's where you end up. Look, I'm really optimistic around stablecoins. I think they will be a primary use of payment in many emerging market economies, which is what Kathy was talking about. The idea that particularly countries with challenged currencies will rotate to Bitcoin instead of their local currency. And we're already seeing them rotate to dollars via stablecoins. If you look at what's happening in Nigeria, if you look at what's happening in Argentina, if you look at what's happening in Turkey and parts of India, you see massive stablecoin adoption for exactly the point Kathy is raising. It doesn't change our price forecast because that was never actually a big part of our forecast. We see Bitcoin as serving two markets initially. One is the store of value market, and two is the international settlement market for apolitical currencies. In other words, we think we're entering a world where currencies are politicized and used for political and macro deliberate reasons. You can see a little bit of that with what's going on with the yen. You can certainly see the way like Stephen Moran talks about the dollar in the US. And we think in that world, some countries will rather use an apolitical currency like Bitcoin. Over the next 10 years, I expect that will happen. Kathy's idea that they would be used as local currencies, I just think that's a further out idea for Bitcoin, right? Because those users will not be comfortable doing that until the volatility of Bitcoin depresses a lot more. I think we'll get there eventually, but I didn't see that happening in the next 10 years anyway. So it doesn't change my view because it doesn't disrupt the digital gold narrative. It doesn't disrupt the apolitical currency narrative. But I guess if that was part of Kathy's thesis, then I understand why she removed it, because the stablecoin competition there is very real.
Matt Hougan's analysis gives us one of the clearest roadmaps for understanding Bitcoin's present and future. Right now, we're in the middle of 4 short-term headwinds: macro softness, post-liquidation uncertainty, cycle-based selling, and regulatory impatience. These forces are loud, emotional, and temporary. But beneath them, the long-term forces are far more powerful. Institutional adoption is accelerating. Regulation is trending toward clarity. Stablecoins and tokenization are scaling globally. The 4-year cycle is fading. Liquidity cycles are set to turn. And Bitcoin's core value proposition, apolitical, global digital wealth storage, is attracting more demand every year. Hougan believes the next few weeks may remain choppy, but by mid-December he expects sentiment to shift. And by 2026, he expects the beginning of one of the strongest Bitcoin years in history, with a realistic path to $200,000 and beyond.